Good afternoon, everyone. Thank you for joining today's webinar. I'm Hebe Chen, Market Analyst for Vantage Australia. Today, we are joined by one of the leading innovators and thought leaders in the industry to talk about future, and I'm personally super excited for this conversation. But before we start, I think please note that today's discussion is for informational purpose only and does not constitute any financial advice or investment recommendations. All opinions expressed are those of the speakers, and participants should seek independent financial advice before you making any investment decisions. All right, let's dive in. I'm so excited to welcome Michael VanderDonk, founder of Australian Bond Exchange, a true innovator and game changer who helped reshape how Australians access to bond market. And we are going to discuss with Michael what the future for the Australian digital finance will be. Welcome, Michael. It's super exciting, and thank you for joining us today.
Thanks very much. It's exciting to be here. So thanks very much for the invite.
Thank you. Michael, to start us off, I think tell us a bit about your exciting journey. You often say that you are a technologist at heart who happens to work in the finance. What led you to and bring the vision into life?
So I've been working with computers for many, many years now. My elder brother built one of the first kit machines. This is back in the 1980s. So I've been working with computers since that time, and I've been playing with them in various different avenues. Finance is just one of those. So I've worked in small startups, I've worked in big consultancy firms, excuse me,
Right.
and finance is one of those areas that has a lot of technology and is deploying that technology in interesting ways. So I keep track of a lot of different aspects of technology and start sharing across those different industries that I've worked in. So, and finance is just one of those.
Yeah, so you mentioned about technology in like very different ways, and then you chose the bond market. And bond market, as you know, and everyone knows that used to be a quite a institutional playground that not all the retail investor can get access to. And you founded the ABX, the Australian Bond Exchange, that sort of changed the game completely. Now we are standing in a different era. We are standing in the entrance of a digital assets time. And do you see any similarities? Do you see the history may repeat itself, rhyme itself, that when we get into the new era of finance?
Definitely do see a change. So here in Australia, it's a quirk of history that regular Australians, you, me, everyone, except the ultra rich, if you had $250,000, you could buy a bond, invest in a bond. Regular Australians were not able to. And that's quite shocking. So one of the co-founders, the CEO, Brad McCosker, he kind of stumbled across this, not really, but saw this with his parents trying to invest for their retirement and not able to invest in bonds being a stable income source. So he needed to go and fix that. And that's essentially where the Australian Bond Exchange came from, is that trying to solve that problem for regular Australians, being able to invest into one of the oldest and most well-known investment choice there is, which is bonds, fixed income, where elsewhere in the world, Europe, that's often the first investment that gets made. All right, that's kind of like the stability, the foundation of investments, and then everything else that we have available, the entire finance selection or the investment selections, were built on top of that. Right? So it's an interesting evolution that I see happening, right? Especially with the Bitcoin crypto evolution, how that's grown over the last 10, 15 years. It's not really much older than that. And it's bringing back to the individual the ability to make their own choices. And I see that as a benefit for everyone.
Yes, exactly. I think that you're saying that this is a innovation, also a revolution to the people, how people invest in it. But when we're talking about digital asset, I think the traditional views is that it's quite different from the old school like stock, like a bond market that you help the investor to get access into it. When we just previously talking about the similarity, what something the challenge is the same thing, that access is the same difficulty, but anything that you feel is different, like this time when we're talking about digital asset, if we're trying to building the assets that you try to build for the bond market, do you see any difference that will occur just in front of us?
Yeah, so one of the big differences that that I see with this is direct access to the market, meaning that with the digital assets, you hold your wallet and you hold in that wallet the asset, whatever that's. So you can get on your phone, and this is where that difference gets made. You're now holding that asset on your wallet, right,
Mm,
on your phone. So it's you don't need a broker or a banker or an institution to stand in the middle of you and the market, right? And that is a benefit, I think, overall. It does bring its own problems, right? Because you have, the bankers and the brokers and the investors. They're the and the sorry, not the investors, the investment firms. They're the ones with the expertise in the market, right? So they know how the market works and they can advise you and help you make the correct choices. But at the same time, you may know more than them, have information that they don't have. So it's a cost benefit. But I think overall having direct access to the market is a big change.
yeah, 100%. I think you mentioned about the access is probably the major challenge when we're talking about digital asset, digital investment. And now I think that all the countries everywhere is trying to building up this safety entrance. Like we're trying to safeguard all the investors if they're trying to get into this market. And I know that Australian Bond Exchange participate in a very important project that led by Australian government. They're trying to reshape this project, the future of the Australian digital finance revolution. Can you share a bit of the project called Acacia? What's that about? What they're trying to solve, and what's the ultimate goal that from your perspective?
Yeah, so Project Acacia is a collection of it's pretty much all the financial regulators in Australia, so the RBA, Treasury, ASIC, coming together to experiment and look at how to build and use a central bank distributed currency or digital currency. So this is essentially taking Australian dollars, real Australian dollars, into a digital environment. So just like you have in your wallet a $10 note, this is digitizing that $10 note. This is a shift in the way money works in Australia, or a redefining of the way money works in Australia. So it is looking purely at what they call wholesale CBDC, so wholesale version. So this is banks, finance firms using that digital currency to transfer money back and forth. This is slightly different than, say, a bank account, which is a representation of one bank transferring a debt or credit to another bank.
Mm,
Right. This is, again, the RBA is involved in that transaction with the various transaction methods, but with a CBDC, this is enabling us to take a lot of the advances we get from a digital currency, specifically the atomic settlement. So
mm,
what I mean by that is, if you're doing a transfer of, say, a stock or a bond with your cash in your bank account, there's multiple steps in that. I've got to transfer the cash to the broker. The broker then holds onto that cash and transfers that to, say, the ASX. ASX will then take the cash and transfer that to a bank account for the broker, who takes the asset, transfer it back. There's a lot of steps involved, right?
mm,
Very quick summary. With atomic settlement, right, that all happens in essentially a single transaction.
mm,
Any step of that chain fails, the whole transaction gets said, no, clear, no worries, no money gets transferred, no asset gets transferred. Most of your viewers, if they invest in the stock market or invest in a lot of stuff, will hear or read the papers, will see and hear of transactions that fail.
Mm.
All right, and these failures happen, and they can cause flow-on effects where you as an individual gets impacted by some other failure. Right, and that's a known market issue, a known market risk, where that flow-on effect can in fact infect other transactions. Where with a central bank distributed currency and the asset on that same digital chain, if you will have that independent transaction will either succeed or it will fail. And no other transaction gets impacted by that one success or failure. And that's where the real value of this kind of experiment and this kind of digital asset, digital currency is coming to play.
Well, this sounds like a very, very different from how we view money, how we view currencies today. And based on that, do you think that will sort of the reconstructing the whole digital asset landscape, like in terms of we have the introduction of the digital currencies, the participant of the government and the central bank, do you think that will change the whole digital asset landscape fundamentally?
So personally, I think it will. So we have a lot of um, experiments happening, not just here in Australia, but around the world, of how to deal with digital currency and use that as maybe not necessarily a replacement, but as a parallel to the existing currency methods. If you've ever tried to transfer money overseas, and this is often the use case that gets talked about, if you've ever tried to transfer money overseas, it's fundamentally difficult.
Mm.
Because it costs a lot of money, it takes a lot of time, it might happen, 24, 48 hours later or longer. That's a difficult problem for a lot of people. Digital currencies allows us to shorten that time frame, make it safer. Again, I was talking about atomic settlement, right? It offers a whole bunch of opportunity for us to improve that process,
Mm.
right? That has a bunch of flow-on effects, right? It has a bunch of risks associated with that. If it's easier to transfer money, then it's easier for fraud to happen. It's
Yeah,
faster for fraud to happen, right? So we've got to kind of balance these things.
yeah,
But in terms of a net positive, I think is making it easier to transfer money
yeah,
will have a better ongoing result, and more people will start doing it, which
yeah,
adds to the process and adds to the flow of the way things work.
yeah,
Right? So if you look at if you think about, or you think about, or the people listening look at the way Oscar, or the new payments platform, has
mm,
enabled you to transfer money on your phone to your friend in an instant.
yeah,
Right? If you're old enough, you would remember that it would take a day or two, or on the weekend, good luck. Right?
yeah,
Transferring on Friday, they probably might get it on Tuesday. Um, it's made a big difference and builds trust in the system. Yeah.
yeah, yeah,
And I think this is
exactly,
another example.
exactly. Yeah, I think the way that we look at payment has changed quite substantial in the past 5 to 10 years. I think I
Yeah.
still remember that about 10 years ago, when you want to transfer to someone else, you have to write down the BSB numbers, everything. And now, as you mentioned, you can just key in the phone number and
Phone
they could
number.
just,
Yeah.
yeah, transact that immediately. I think
Yeah.
you made a very good point is that the technology always moves very fast, but there's always a regulation or legal loopholes that will also surface when this technology seems to move too fast and too quick. And from your perspective, especially the technologist, what are the key legal or policy hurdles you think that will potentially holding back this process, and especially in Australia's case?
Yeah. And again, you're a big part of this Project Acacia is looking at what are the legal and regulatory constraints and issues that we run into. And one of the biggest ones is that a central bank digital currency isn't actually currency currently, and it won't be until the laws get changed. So legal tender, the way legal tender is defined in the law, is it's the banknote, right? So they've got to do some funny dancing to try and get to treat it as a digital currency, because it's not. And that's the case in a lot of cases. It's not actually currency. It's not actually money. We need to solve some of that. And how do we define that from a legal perspective and change the laws to be able to deal with that, right? And if we look at currently the way crypto assets, so these could be digital tokens or NFTs or Bitcoin even, they're defined and treated and regulated differently depending on who's doing what and how they're being dealt with. Sometimes it's property, like a stock or a house or a painting, an investment painting, some property, that kind of aspect. And sometimes it's a security, right? Some of these ICOs have been treated as security. And again, that brings in a bunch of different laws and regulations and requirements. So we're seeing a lot of regulation happening right now this year. So Treasury right now has a draft paper out to look at how to deal with payment services, payment providers, and that's around stablecoin and how to get Treasury and who manages what or regulates what in that space. And we've had early this year a bunch of anti-money laundering changes. So that's know your customer, know your client changes. So if you've tried to get access to a bank account, or you will see your banks responding to that law by getting to recertify who you are and this kind of thing. So these are very different aspects of the law that all tie into exactly what we're talking about, and they have to change or adjust or be tightened or loosened. And that's part of this pilot, is to explore different aspects, real world, real money aspects, and find out, okay, it didn't work because of, or we can't do it this way because of, right? And then it allows the regulators some actual practical experience on what they need to do to change it. So
yeah, it looks like that we are still at the very early stage of the experimenting different type of the format of the digital money, digital currencies. I think for many, especially, I think I want to ask these questions for our audience, is that for many people now looking into this market, they're getting confused about how can I define money. As you mentioned, that you have stable coins, we got CBDCs, we got the cash in our wallet. Maybe I think many people probably don't have the cash in their wallet anymore, and also the amount numbers in your bank account. Like from your perspective, can you make a very simple explanation to all this audience? How can you define the stable coin, CBDC, and the meaning of the digital money?
yeah, so digital money gets defined in many, many, many different ways, but we want to tie it back to, well, the easiest way I find is to tie it back to where's the risk, who owns what, if something goes wrong, who do you get to talk to, who do you have to chase, who's responsible? If everything's going right, everyone's happy, everyone's got money, everyone, doesn't, no problems. Great. But when it goes wrong, when something happens, when there is a failure in the systems and you can't get the cash out of the ATM, right? If you have you can't transfer the money, that's when you start to go, okay, who's actually responsible? So the things I kind of think about is the difference between, say, a stablecoin and a CBDC. From a technology perspective, they are fundamentally the same thing. The difference comes in who issues them. So a stablecoin is issued by someone. It could be a bank, it could be a building society, it could be you or me, right? A CBDC is issued by the central bank, right? So if you've got a stablecoin issued by a bank, that's, in Australia, they're pretty trustworthy, right? There's a lot of good actors in Australian banks. If you're in another country, that may not be the same. But not saying all the banks are bad, but there are known cases. In the US, there's been a bunch of bank failures a few years ago, right? That's if you had a stable coin with them, there goes whatever money you had invested in that. If it's a central bank, that's a different scenario. You're now going after the government. You're now going after the US government or the Australian government or right, to get your money back, right? That's a different class of risk. And then you have the architecture. So the technology that the coin, the stable coin, or the distributed CBDC is minted on, right? For a stable coin, that might be public or private, with the, who regulates that, who controls that. Again, that's part of that risk profile. If it's private, you don't actually know if it's actually on a chain. It might look like it, but that doesn't actually mean it is implemented in the same way that Bitcoin is. Right. And that's that offers, again, a different risk profile, a different adjustment. And then you've got the underlying reserves of the cash. So if you have a stable coin, they are nominally, not always, but nominally, usually backed by 1-to-1 fiat dollars or some real asset. All right. If it's government backed, then you know that it's government backed by government dollars. Right. Worst case scenario, they print more dollars. Right. Causes inflation, etc. But again, this has been happening for the last bunch of years anyway. Pretty much every country has been printing many, many more dollars each day. If it's a bank themselves, they can't print more Australian dollars. Right. So that's, again, another part of the risk. And then, of course, governance. Final one is the governance piece of the management of that stablecoin or CBDC. Right. One of them is public policy, so laws in Australia, US, etc. is the CBDC governance. Or for a bank, or for a stablecoin, it's their own internal process, or possibly the issuer writing their own laws, so changing them, or even in some cases a distributed voting, right, for some stable coins, a DAO, for example. So again, it varies. The differences are really around the controls and the risk profile of those particular assets.
Yeah, sounds like there's a lot to take on, I think, for the future money holders.
Yeah.
And you not only have a different type of money, you got to look at who's issued the monies, who's behind them, what sort of the architect, sort of structure and behind this type of assets. So that question is coming to what sort of the future mindset. If you have so many things to take on, you can't just taking money as the money that what we view it was. What sort of future mindset we have to build up today to embrace such a very complicated but also might be a very exciting future?
Yeah, so I'm really excited about the future. Right, there's a lot of stuff happening that I find really exciting and really beneficial, and I think that is going to speed things up. So that's going to get that technology change is going to be happening faster, much more regularly. We're going to get new and interesting stuff happening, and it's also going to bring things closer together. What I mean by that is, again, kind of coming back, echoing the comment around transferring money from a bank account 10 years ago, right? It used to take 2 days or a day. Now it can be done in seconds, right? That's bringing the distance, metaphorically, closer between money transfers. We're going to be seeing a lot more of that happening. So a lot of the friction that happens is going to be starting to shorten, metaphorically, right? Bringing them closer together. All right. The fundamentals will stay the same. Looking at the risk, understanding the risks of what's happening in the market, what's happening in your environment, understanding that you have, and we already know what those risks are. We have a long history of protecting your physical wallet with your cash in it. Right? If your purse gets stolen, all the money that was in there is very likely to be gone. If you have a digital wallet on your phone and that gets stolen, we know what happens, right? Again, the metaphor holds across both of those, right? So understanding the risks is I think core of whatever choice you make, right? And how to mitigate those risks. How do you protect against someone stealing your wallet, whether that's a physical wallet or a digital wallet? These kind of things, and there's a lot of ways to do that. And there's a lot of different ways that the bad people out in the world are trying to steal both your physical and your digital wallet. So it's how do you protect against those?
Thank you, Michael. Yes, I think exactly this is the future that we definitely expect that everything will getting speed up. As you said, either it's the money transfer, either it's a technology transfer, not transfer, innovation. Everything will be just faster and faster. But the fundamental, especially for everyone that living in the financial world, that it's not going to change. As you said, mitigate the risk is the lesson you can carry on from your old time to the future. And thank you so much, Michael. Thank you for sharing us your insights. It definitely give us a clear map to holding in our hands, working into the future finance world. And to
Great,
everyone
thank you very
join
much.
us, thank you. Thank you. For everyone joining us today, thank you for spending your time with us. We hope you enjoy the discussion and conversation. We very much looking forward to seeing you again soon. Thank you.
Thank you. Have a good day.
Have a good day. Have a good weekend.